This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're watching us on Bazaar Morning Call. We're live from the CNBC-TV18 Motilal Oswal studio. At the onset, let me wish all our viewers a very happy festive season. Today, through the day, you'll be seeing all of us in our festive gear and festive cheer. So, good morning to all of you. We kickstart a brand new week. Nigel is here with me, and a bit Prashant will be with me as well. Nigel, it's not only festive week, it's also a day today that comes in after a holiday and before a holiday. Isn't that the best?
Absolutely. You just come in there, get through Monday, and you're off again on Tuesday. So happy Dussehra to all our viewers. And it's a good time, Sonia, right? Maybe the equity market's in a bit of a flux for the time being. But India came out on top yesterday, so I'm quite pumped about that. And it appears that this World Cup campaign is shaping up very, very well. So totally excited about that as well. Prashant, what else?
Morning, guys.
Hi,
all
morning.
looking nice and festive. And always makes you wonder, why can't we dress like this every day? Right? Well, happy Dussehra to all of you, as Sonia and Nigel said. And yesterday was, there's so much debate about what Kohli did towards the end, right?
Fine.
And, but we won.
That's all right, as long as you
the
win.
match was in the bag. That's what I was telling a lot of people that... I thought it was okay.
It was okay.
No,
and Dharamshala was supposed to be a difficult venue for us. So we
turned
came out on top.
Exactly.
And we dropped a couple of catches. Maybe you can debate about Kohli, but for me, Kohli is the king. He's the big-time player. He delivers when it's needed the most. And people are writing of Rohit Sharma as well as captaincy.
Oh, no.
It's been absolutely splendid, in this World Cup so far.
We had Srini, a sports editor, who said that actually Kohli, without the captaincy, is a free man. He doesn't have to think about anything else except his batting.
Yeah.
And I think it's turning out that way, right? Especially so far in this World Cup campaign. Let's actually come back to cricket in a bit from now. We'll have time for that. Let's start by telling you what you need to know as we start and begin another trading session. So, it's a bit of a risk-off kind of a mood environment out there. Global markets are in a risk-off mode. And I want to start by saying that there's a holiday tomorrow. So that kind of adds to it in the way that you don't want to go big before a holiday in one market whereas the other markets are trading. So I think keep that in mind. Because that will have an influence, should have an influence rather. US markets sold off on Friday, so equities were down. The Nasdaq was down about 1.5%, 1.53. And what signified that there was a risk off was that gold prices are now closer to $2,000 than they've been in a while. So that's basically characteristic of the environment we are in. The dollar was flat. The dollar index, that is, oil prices are flat. The dollar index is slightly above 106. Oil prices are about 92 plus. They came off a little bit, but not by much. Now, it's so the Treasury market, the US rates market is so volatile that I did the same thing last Monday when we started the week. Not look at what happened on the Friday before, but look at the weekly change. So the 10-year in the US went up 30 basis points last week. Right? And this after falling 18 basis points the week before. So what are we doing here? Is there a real clear direction? If you talk to people who track this market, they tell you yes. And the direction is bond prices lower, yields higher, even though on Friday, and this is accounting for the 30 basis point rise, yields came off about 7-8 basis points. The reasons behind the rise are likely to remain operative in the next few months as well. What are the reasons? Higher growth, so-called US exceptionalism, right? They can print all the dollars they want. Borrowing is not a problem, at least for now. At some point in the future, it will be. There are technical aspects like supply of bonds, etc. as well. Labor market is very strong, etc., etc. So these reasons will not go away. And that's the reason why many believe that, US yields perhaps will stay higher for longer. Powell, of course, indicated that financial conditions are not, and I quote, too tight. So this is another one of those reasons where the Fed is itself saying that maybe the neutral rate is slightly higher. We discussed all of this last Friday. Just to tie all of this back in, the risk-off environment to the levels here, the big support for the Nifty stands at the 200-week moving average, which is 19,438. We left off at 19,542. 19,500 is the first level, but that will most likely, perhaps, it got tested, but around the 19,512 odd levels was the low on Friday, and then there was a bit of a bounce. So the real level is that 200-week moving average, which is 19,438. Below that is the October swing low for the Nifty, which stands at 19,333. And that is the next support which will start to come in. For the Nifty Bank, supports still. I mean, the first one is the 43,600 level for the Nifty Bank. Again, you know, we were talking about how maybe, just maybe, there is a double top indicator because of what happened last Wednesday and Thursday, but the chances of that were low, and we did end below that particular level. So the next support for the Nifty Bank stands at about 43, just under 43,200, which is the 200-day moving average for the Nifty Bank. Again, not very far away from where we left off. And the resistance for the Nifty Bank stands at about 44,300, 303 to be precise, which is the 20-day moving average on the way up. So these are levels that you need to work with. But mind you, this is not a market to chase higher. If you see strength, this is a market, if you are compulsively inclined to trade, to get in and get out in a very tactical kind of a way, intraday, not carry positions, especially not today, because tomorrow is a holiday once again. The GIFT Nifty is indicating a 45-point lower start. Sonia.
I like the fact that you started with tomorrow as a holiday and you ended with tomorrow as a holiday. So in case somebody missed out on...
The most important.
All right. Well, you know, today I think there are many positive triggers that the street can latch on to. And in that context, I think that despite the negative, global environment, the market is definitely going to move up by the end of trade. At least that's the sense that I'm getting. Now, we start off with what came through on Kotak Mahindra Bank, where finally the uncertainty has been lifted. They've got a new CEO on board. Ashok Vaswani is the new CEO of Kotak Mahindra Bank. And he comes with a lot of experience. He was a former CEO of Barclays UK. And of course, this ends all the uncertainty. Perhaps it could end the underperformance as well. Kotak Mahindra Bank's numbers were also quite decent in terms of both loan growth, handsome loan growth of 18.5%. Asset quality was the best in 33 quarters. So that's one stock that the street will latch on to. The other is ICICI Bank, complete purple patch, as JP Morgan put it in their note. Very strong earnings, management commentary is positive, the loan growth is healthy, the asset quality has improved. So, both Kotak and ICICI Bank form about 12% of the Nifty. In that context, they could perhaps together take the Nifty higher. But not just that, other financials like, for example, Paytm reported very good numbers as well. The EBITDA performance has been improving sequentially, and this time that continues. So they reported about 150 crores of positive EBITDA versus a loss last year and versus 84 crores of positive EBITDA last quarter. So a couple of these results could definitely take the market higher. However, the global context is not great. On Friday, the Dow ended with a cut of almost 300 points. And, we continue to see 10-year yields at that 5% mark. Geopolitical tensions have escalated across Gaza and, because of what's happening with the Israel-Hamas war. So that is something to watch out for. But back home, there is so much strength that perhaps our markets could overlook the kind of negative cues that we have from across the globe. In the context of earnings, we have some big, some heavyweights reporting their numbers. We'll end the week with Reliance. And through the week, you have Asian Paints, Maruti, etc. So all eyes will be on that. But otherwise, I don't think it's a bad outcome because you have two big boys, Kotak and ICICI Bank, that will perform today.
Well, and the bulls will be counting on the banks to bail them out. And the banks and the financial services index, both of them will be in focus. As you mentioned, ICICI Bank and Kotak Mahindra Bank, they'll react to numbers. HDFC Bank for the last week, it's been going numerous times closer to around the 1,500-odd mark. And from there, it's seen a bit of a bounce. So that 1,480 to around 1,500, that seems to be a bit of a buy zone. And that's precisely what's happened on HDFC Bank even on Friday. Nifty Financial Services Index, well, that plays out the weekly expiry because tomorrow is, we're closed tomorrow. Looking at the options data on the Nifty Bank first up, the 43,800 strike, well, it was fairly active in Friday's trading session. The premium is roughly around 250 rupees. So there is writing being seen out there. Now, we'll have to wait and watch whether or not this particular strike gets unwound. Because those call writers, well, they are playing that the 44,050 odd level doesn't get breached. So that becomes the first resistance level. On the downside, last few sessions last week, we went closer to around 43,500 and we bounced off that mark. So that becomes the support zone. In terms of technical indicators, the 20 and the 200 EMA, that's the broad range that you're looking at. So on the upside, 44,050, then 44,300, which is the 20 DMA. That's the mark you're looking at. On the index itself, the FI as well, the net short. And the short positions actually have gone up by close to around 18,000 contracts, in the last few sessions. So it was at around 72,000 odd. Now we're closer to around 90,000. Remember, when we go to around 100,000 odd, that's when we see a bit of a near-term bounce. There's some shorts that do get covered out. So that's the FI positioning as we speak. The Nifty, on that index, if you're looking at the options data, 19,550, 19,600 call, both of them, between them it added close to around 60 lakh shares. and there was writing being seen at those levels. So just plugging in those premiums, you get your resistance zone at around that 19,650. And that perfectly ties in with the 20 as well as the 50 DMA. So if we can get up and going, you're expecting some bit of resistance to come in around that mark. On the downside, 19,500, that seems to be a bit of a support zone because we have quite a bit of open interest built up out there as well. The GIFT Nifty for starters was indicating a flattish to a mildly negative start. But I think the Nifty Bank, that's going to be the important one. The bulls turn to the Nifty Bank to bat for the bulls. Let's see how that goes. A 50-point downtick. I think that gets bought into. Trail your stop loss as well and see how it goes from there.
Okay, well, we have lots coming up on the show in the next 2.5 hours. So without wasting any time, let's begin with some money market views. The rupee has been quite weak actually for the last many days. But B. Prasanna of ICICI Bank says that the underlying strength of the dollar is intact, supported by stronger US economic data and geopolitical uncertainties. He says the central bank's support has helped Asian currencies from further depreciation. He adds the rupee continues on the path of slow, gradual depreciation guided by oil buying, equity outflows and RBI intervention on either side. He expects the rupee to trade in a range of 83 to 83.50 this week.
Okay, well, on bonds, B. Prasanna says that global yields resume their upward journey on strong data and receding risk off. While oil continues to consolidate at higher levels, he says these factors resulted in pressure on local yields as well. Goes on to say risk of OMO sales continue to linger as system liquidity is expected to get a major boost by the beginning of next month. He expects the market to tread cautiously with a 10-year benchmark bond yield ranging between 7.3 to 7.4%.
Well, we've got a lot of stocks to track today at our special Top 10 segment. We get to that in just a bit for now. For the time being, we're running through the list. We're looking at ICICI Bank, JSW Energy, Paytm, RBL Bank, L&T Finance, Tejas Networks, Ipca Laboratories and Zydus Life. All of them will be reacting to positive news flow, while on the flip side, Kotak Mahindra Bank, Amber Enterprises, they are stocks that could be reacting to the negative piece of news over the weekend.
Okay, well, there's lots to cover, isn't there? Well, let's focus on U.S. markets first. Let's listen to some commentary coming in. This is the Atlanta Fed President, Rafael Bostic, and Nathan Sheets of Citi. He's their chief economist, on the inflation picture from here and what they make of Fed Chair Powell's speech last week. That was on Thursday. Listen in.
These are complicated times, because there are lots of things going in all directions. We have inflation's come down a lot, and I think the momentum is going to continue to be that way. But you see the resilience in the broader economy, which makes it difficult, and that it's a complicated thing. And so in talking about the economy, it's always a challenge because you have these cross currents. Whatever narrative you want to tell, there is some data that's a counter on it. I think the trajectory of the economy is likely to go in a way that is very consistent with what my outlook is, which is we are not going to see a recession. That's not in my outlook. We're going to see a slowdown, and inflation will get down to its 2%.
Our baseline expectation is in line with that of the Federal Reserve, that the Fed can get further traction on financial conditions by holding this rate at 5.3% for some time. And as they hold the rate, there will be further headwinds to economic activity. And frankly, that's supported by this run-up in 10-year Treasury yields that we've seen. That the Fed has tightened at the short end, and that's pulling back on financial conditions generally. And now that's manifesting itself after a long while in a higher 10-year Treasury yield.
All right. Well, that's Nathan Sheets of Citi. Lawrence Belanco is now joining us of CLSA. Lawrence, good morning. Good to have you with us here on the program. Thanks very much. So has the picture gotten a little muddled? What is your view on the Nifty? Let's begin there.
Yeah, so I think the time frame is quite important because in the short term, yes, we're getting this corrective price action. We basically saw the September highs momentum slow as we made new highs for the Nifty, and we've seen a correction unfold. We have slipped below the 50-day, so there is downside risk to the first big support level at 19,100 to 19,200, and then the June breakout from the 2-year trading range, which sits around that 19,000 area. So we're in this short-term correction, but it's worth bearing in mind if you take a step back and you look at that longer-term structure, the breakthrough that 19,000 area, that ended 2 years of ranging action, and you've got longer-term upside targets towards 22,800.
Short-term correction that you're expecting, where there's a downside risk to 19,100 on the index. Lawrence, hi, good morning. Which are the sectors or stocks that you think could take the market to that level in the near term on the downside?
Yeah, so definitely the banks come into risk. You know, that have been a big outperformer from the 2022 lows into June this year. And then you've seen the relative price action of the banks roll over. The absolute price action, if you look at the Nifty Banks Index, you'll see it on the screen there, double top pattern. So there is another 5% downside risk, and that's the likely sector to take the market back to at least that 19,100 area. Longer term, you know, it is a sector that we do like, but that's where the short-term risk is in pause coming through with this market.
Hi, Lawrence. Earlier we were talking about a level of 20,980. Is that target still on? Closer to around 21,000 odd on the upside. Now, you've given us the downside levels, but on the upside, where do we trend to?
Yeah, absolutely. So 20,900 is still the shorter term upside target. But like I say, if you take a step back and you look at the longer term breakout from that 2-year pattern, you can get up to 22,800. So that's the point here. You need to be patient. There is a correction unfolding. And we think the levels of 19,100 and, worst case scenario down to that 19,000 area are levels to accumulate, but you don't need to rush in right now as we work through this correction.
So, and that's the worst case, Lawrence, or you think it can get, because of how global markets, etc., are looking, it can get lower than that, lower than 19,100, 19,000 levels, because that's about 2% from here.
Yeah, that's right. I mean, I think we will run into some liquidity risks on global markets. You could see an undershoot for those levels and a potential break of 19,000. But as we see it currently, there's more sort of rolling corrections, sector rotation that's going on more than these Delta 1 or highly correlated corrections that we saw, back in 2007, 2009 and through the COVID side. It's been more rolling corrections, the price action so far.
Okay.
How's the US? How are US indices looking? The Nasdaq and the S&P.
Quite interesting. Nasdaq still holding above the August lows, as well as its 200-day moving average. So that's sitting around the 14,600 area. And if you look at the S&P, yes, we did close below the 200-day on Friday, but there is a shelf of support at the 4,200 area, which is the upper boundary of the trading range that you saw in the first quarter. So again, Nasdaq has been outperforming. You've seen some short-term correction there. Again, you've seen rotation gain on, but it looks like more trading range price action and correction within those ranges.
Just one final question before we let you go. In your note, you do mention that TCS and L&T Technology are presented as buy candidates. Is that your, assumption for the entire sector? I mean, do you like the IT sector now? And are these your top picks?
Yeah, it's quite interesting because that is a tactical rotation trade. As the banks correct, you get this rotation and relative outperformance in the RT side. So I think that is more tactical than longer-term breakouts. Again, the longer-term breakouts, I think, still come from the banks ultimately, but in the short term, that's where we've seen the action. So yes, it's a rotation trade back into tech, which has underperformed. TCS has corrected back to the 50-day. It's bounced off that post its results. And LT Tech, the same scenario. We've seen this recent pullback, but longer term, you had a breakout there. I mean, the other space that I think is vulnerable in the near term through this correction, where we've recommended taking profits and you're rotating to larger cap, is in the mid cap space. It's been a great outperformer year to date. Recently, we broke below the 20-day, which stopped the upside acceleration that you've seen in that market. So we do think there's some underperformance coming from that mid cap space that suggests you should take in some profits and look for a better level around the 36,000 area on the mid cap space.
All right, Lawrence, we will let you go on that note. Thanks a lot for joining in. Appreciate your thoughts. So that's Lawrence Belanco saying that there is a short-term correction that the market that he's expecting in the market. The downside risk is at around 19,100, but after that passes, there will be a 22,800 target that he has on the Nifty. So in the near to medium term, the market uptrend is intact. Let's take a quick break. On the other side, we have a list of top 10 stocks lined up with our entire research team. Keep it with CNBC-TV18. Welcome back to Bazaar Morning Call. There are plenty of stocks to look at, and there's a lot of cheer actually this morning, led by some of the banking names. So let's get straight to it. Our list of top 10 stocks. Top of mind is Kotak Mahindra Bank. Finally, there's some clarity on the new CEO, and of course, there are the earnings as well. So let's take it straight to Abhishek now to give us the latest on that. Abhishek, morning.
Morning, Sonia. So as you mentioned, there is new MD and CEO at the helm of running Kotak Mahindra Bank from 1st of January 2024. That is Mr. Ashok Vaswani. Coming on to the results, what has worked is that the deposit growth on a YOY basis at about 23.3% is perhaps one of the best that you are seeing in last 20 quarters, and sequential growth in deposit is of 3.8%. Loan growth YOY at 18.5% is perhaps the best in last 3 quarters, and 6% sequential growth is perhaps the best in last 6 quarters. The subsidiaries' quarterly PAT is the highest ever that they have recorded in a quarter. Now, what has not worked is that the deposit growth has come in at a huge cost. So, net interest margin compression is higher than estimate. Street was working with an estimate of 15 basis point decline, but it has declined by 35 basis point. Slippages have increased. Annualized slippage ratio of 1.51% is perhaps the highest that you are seeing in last 5 quarters. Operating profits, they have declined by 6.9% quarter on quarter. Perhaps for the first time, you are seeing an operating profit decline quarter on quarter in last 5 quarters. In terms of P&L, both the NI and PAT is a beat on our poll. Back to you.
Okay, all right. Got that on Kotak Mahindra Bank, Abhishek. But what about ICICI Bank?
Well, Nigel, records galore over there for ICICI Bank in Q2. In terms of all-time high, ROA and ROE of quarterly performance is at all-time high. Quarterly PAT of ICICI Pru, ICICI Sec and ICICI Home is at all-time high. So, subsidiaries PAT is all-time high in terms of quarterly performance. Deposit growth 18.8% YOY is the best in last 10 quarters. And sequentially, the loan growth of 5% is perhaps the best in last 6 quarters. Overseas net interest margin is at 1.56%. So that's perhaps one of the best that you are seeing in last 7 years or 28 quarters. The unsecured book that continues to rise, it's at 24-quarter high of 20.75%, and that's aiding the net interest margin. In terms of stress, they are at 11-quarter low with restructured book at 0.32% and annualized slippage ratio of just 1.69%. On the flip side, like you are seeing for the sector as well, CASA ratio continues to decline and is one of the lowest that you are seeing in last 35 quarters. In terms of CASA per branch, that's the lowest that you are seeing in last 9 quarters. P&L, both the NI and PAT is a beat on our poll. Back to you.
All right, Abhishek, thanks very much for that. So that's banks, and we'll come back with more in a bit with Abhishek. But ICICI is the big one, and along with Kotak. JSW Energy is the next one we're focusing on. Vivek has got details on this one. Vivek, morning.
Well, good morning. That's right. So JSW Energy, it's been a strong quarter from the company this time around. Now, largely aided by very high merchant power sales volumes, along with higher realizations. The revenues have jumped up by almost 36.5% on a year-on-year basis. Also aided by the newer acquisitions kicking in this time around. So revenues close to 3,260 crore. Now, talking about the EBITDA, the Mitra acquisition working very well. It has actually surpassed what the company's internal targets itself were. EBITDA is higher, has more than doubled on a year-on-year basis, coming in close to the 1,886 crore mark. Margins this time around 57.5% versus just 37.5% on a year-on-year basis. And when you're talking about profitability higher by 82.6% on a year-on-year basis. Now, what has actually worked, especially in terms of the EBITDA margin improvement, a lower coal cost, this is something that has aided. Also, the merchant tariffs this time around, given high power demand, has actually come in much higher than what the clearing price at IEX was. Elara, however, maintains a sell stance on the stock. What they're saying is that largely on account of expensive valuations, JSW at this point of time is trading at 23 times FY26 price to earnings and 11.7 times FY26 EV to EBITDA.
Right, thanks a lot for that. Well, the other positive news flow came in from Paytm, where the EBITDA has improved quarter on quarter and year on year. Abhishek is back with us to tell us. He's also tracking RBL as well as L&T Finance. Abhishek, over to you.
Well, Sonia, to begin with Paytm, the total income is up 32.2% YOY and 8% quarter on quarter. As you mentioned, the EBITDA continues to improve. So EBITDA is at 153 crore versus EBITDA loss of 166 crore in the same quarter last year and versus EBITDA profit of 84 crore in the previous quarter. In terms of contribution profit margin, that continues to expand. It's now at 56.6% when compared to 55.7% in the previous quarter and about 44% in the same quarter last year. Net loss that continues continues to reduce. Now it's at 292 crore versus 358 crore in the previous quarter, and about 571 crore in the same quarter last year. In terms of RBL Bank, strong quarter over there, and like-to-like basis, because they have a one-off, like-to-like basis, the net interest margin has improved both YOY and quarter-on-quarter. Annualized slippage ratio of 2.84% is perhaps one of the lowest that you are seeing in last 12 quarters. Asset quality continues to improve. X of Q3 FY21, the dispensation quarter that you had, asset quality is the best in last 16 quarters, and risk in the balance sheet is reducing. RWA to advances ratio, that's at 14 quarter low of 117.2%. In terms of P&L, the NI is not comparable. However, the PAT is a beat on our poll. L&T Finance, the asset quality has improved. Gross NPA ratio is down to 3.27% when compared to 4% in the previous quarter. Net interest margin is perhaps at an all-time high for them, as they are focusing on the retail portfolio, which is driving this net interest margin. It's come in at 8.6% when compared to 6.9% YOY and about 8.06% quarter-on-quarter. In terms of return ratios, ROA and ROE are the best in last 16 quarters and 15 quarters respectively. P&L, it's a beat on our poll, both in terms of NII and PAT. Back to you.
Okay, thanks for that, Abhishek. Well, let's hop across to Reema. She's here to tell us about some other companies that will react to its numbers, namely Tejas Networks and Amber. Reema?
Hi, good morning. So let me start with Amber, where the top line growth is very strong at 24%. But the disappointment is that the street was hoping that they will report a profit this time, but they have reported a loss. Therefore, even the margin expansion has been less than what the street was anticipating. For Tejas Networks, the big highlight in the quarter was that large 7,500 crore of a deal that they won from TCS for executing a BSNL order. Now, that led to a very strong revenue growth. In fact, the revenues for Tejas Networks is the best that we've seen on record. They managed to report an EBITDA profit in absolute terms after 2 consecutive quarters of loss. Their order ballooned to all-time high levels because it was such a large 7,500 crore order win. The only issue is the company's reported a loss this time on the bottom line, because to execute this large order, the company had to make certain investments in manufacturing facilities, R&D. They had to source some components, pay extra for that. So that led to a loss on the bottom line. But other than that, it's a very good quarter for Tejas Networks. For Amber, as I said, the only disappointment is that the company didn't report a profit as the street was hoping for. Back to you.
Okay, well, Reema, thanks very much for that. But let's move on with, Ipca Labs and Zydus Life, which also reported. Ekta has got details. Ekta, morning.
Thanks for that. Well, big news which is actually coming for Ipca Labs. This is a story that I've been tracking since 2014, where 3 of their facilities were in fact issued an import alert by the US FDA. So the news is that one of the import alerts, based on the fact that they've received an EIR with a VAI classification, which is basically an establishment inspection report with a voluntary action indicated classification, it probably means that the import alert for one of their facilities now stands lifted. This is the Ratlam API plant. It manufactures APIs. It was issued an import alert in March of 2015. Since then, it's been under import alert. And now with this, it's probably lifted. It was inspected in June of this year and was issued 11 observations. They probably managed to solve those observations successfully. Nomura has a buy with a target price of 1133 on Ipca Labs. They've said that the site classification for Ratlam as VAI is a positive surprise. Now, separately, I'm tracking Zydus Life. They've received US FDA approval for a new drug application which is used to treat type 2 diabetes. It is basically, it contains the active ingredient sitagliptin, and the company says it's a milestone approval for the company. They do have limited competition within the branded space for this particular drug, and hence it should be a positive for them.
All right, thanks a lot for that. So let's do one thing. Let's just do a quick read-through on all the stocks in case you missed out on any of them. Of course, stocks with positive news flow: ICICI Bank, JSW Energy, Paytm, RBL Bank, L&T Finance, Tejas Networks, Ipca Labs and Zydus Life. While stocks with negative news flow: Kotak Mahindra Bank and Amber Enterprises. Well, let's find out what's the latest in the world of crude. Of course, the geopolitical tensions have only escalated, unfortunately, at the Gaza Strip particularly. But Manisha Gupta is joining in now to give us a roundup of what this has done to the commodity markets overnight. Manisha, good morning.
Thank you for that, Sonia. Well, we've started Asia on a slightly weaker note when it comes to many of these commodities. After 2 weeks of gains, crude prices have come off its highs. While the risk premium continues, but the aid convoys have started to arrive in Gaza Strip, and that has led to some profit taking. Also, with U.S. suspending sanctions on Venezuela means that crude will also start coming into the markets. Of course, we're still dealing with some deficit in this quarter, and that would continue to keep the crude prices around $90 a barrel, as you can see it even now. Some profit taking is what we're dealing with in sense of coal prices. Steel and iron ore have come off its highs as well. The Chinese demand, while is estimated high ahead of the winter demand season, it also has to do with the fact that property sales for the month of September fell by 19% on a month-on-month basis. That is what is weighing onto the metal sector right now.
Okay, all right, Manisha, thanks a lot for that. For the time being, we'll slip into a short break. On the other side, we'll get to some fundamental analysis. Prakash Diwan will be joining in to help us out with that. Don't go anywhere. Welcome back. Hope you're having a good morning. Well, the gift nifty suggesting we pull back a little bit to kickstart trade, but plenty of stocks to discuss. Prakash Diwan joins us to help us out with just that. Hi, Prakash. Good morning. Let's talk about the two big banking names, Kotak Mahindra Bank and ICICI Bank. What do you make of the numbers, as well as, for Kotak Mahindra Bank, you have a new appointment as well, which the market will take positively?
Well, good morning, Nigel. So let me take Kotak Bank first, because the numbers really didn't have anything very spectacular to talk about. It was just a quarter where they continue to do what they've been doing for the last many quarters, which means focusing on quality, growing in a very calibrated way. The cost of funds is an issue, and they've not been aggressive for a change to go out to the market to kind of borrow at very steep rates. And that kind of reflects in the numbers. But the key out there, I think what the market probably liked about the announcement was that you have somebody from outside who's coming in, and that always is an opportunity to reinvent, to revitalize the structure of the bank, build another team, enrich the team with newer talent. So my sense is, the market will probably start seeing that as a positive towards, the catch-up that Kotak could play in going forward in the next few quarters on the growth that they've let go by. So, that's what the numbers and the appointment tell you. I really don't think there's anything of a re-rating immediately. The ICICI Bank numbers were stellar. There was no doubt. What I liked about these numbers was this is exactly what an HDFC Bank used to do earlier, before all this merger overhang kind of came in. It's moving towards retail. It's moving towards all those segments that it had focused on, SME retail, which are growing very rapidly for them. The cost of funds has also been fairly benign in terms of, no escalation, which is untoward. The quality has improved dramatically. So I think if you look at the internals, ICICI Bank is the one that's kind of revitalizing itself. And, recently I was reading a report from Morgan Stanley, the top 100 business models globally, and ICICI Bank was actually the only bank that features there. Which means that their diversification across businesses has helped, across segments has helped, and all that income that it gets from its other businesses is also kind of probably close to its peak. So, the engine keeps chugging even faster from here on, and they've seen some market share gains as evident from these numbers, which if they can hold on to, probably leads to a little bit of a re-rating, another 20-25% upside very quickly.
All right. Prakash, hi, good morning. I wanted your thoughts on Paytm because, Jefferies put out a note where they've said that now Paytm has finally entered the league of profitable fintechs. And that's a big deal, right, considering how competitive the environment is. The numbers look good. EBITDA has improved quarter on quarter. But for an investor, can one still put in money here?
Absolutely. Good morning, Sonia. So I think between two quarters, what has changed? The price has probably moved from the 800 plus to about 900. 80, 70, whatever, closer to the 1,000 mark. And 1,000 is going to be a big psychological sound barrier of sorts. Once it crosses, there'll probably be a lot of people will start believing the turnaround is finally underway. What's changed for Paytm is it's owned up to its errors of commission rather than omission in its business model when they came after the IPO. And whichever areas they were bleeding, they've tried kind of plugging themselves. I mean, if you see the way the expansion is taking place, it's much more quieter, gradual, subtle. You really don't feel, they're going overboard on any of the new areas, whether it's loan growth, whether it's a POS business. And I think the ONDC onslaught, which is just around the corner, and we've started seeing some, very strong trends emerge, is going to be extremely favorably tied for Paytm's growth. So it's at that juncture of inflection point where it could start riding that boom. And you remember, Paytm is the most omnipresent, platform which people use for money transfer. And if they were to start riding on that ONDC commerce growth, it's going to be a lot of business that will come. Of course, the loan growth area is something which they want to focus because that's profitable. Spreads are much thicker, thinner. As compared to the platform, the payment platform. But that is something which will happen once they have a steady business coming from some other revenue stream. And that's eventually happening. So to answer your question, somebody wanting to get in, yes, if you have a long-term view, it's a great buy, at least for the next 40-50% in the next couple of years.
All right. Prakash, stay with us. We'll keep coming back to you for more. But Anuj is now here in the studios with a quick sense of what he's making of things, markets this morning. Anuj, good morning.
Morning, Prashant, and to all of you and to all our viewers, festive greetings on Navami and tomorrow Dussehra, of course. This earnings season is showing why, we're standing out. May not be, rising a lot, but the Indian market's not falling a lot, and that's because the domestic earnings season has been truly remarkable. Most domestic companies delivering strong performance. I mean, ICICI Bank, just look at that. All-time high net profit, very strong on asset quality. And even Kotak has got a new CEO, so let's see how that reacts. Bank Nifty, of course, would be in focus today. Need to see markets' reaction. And you can't keep falling because of this bond yield issue, because while that impacts FI flows, our markets now are less dependent on FI flows compared to what they were in 2007. So my sense is with the September and October lows of 19,255 to 19,333, they should hold out unless there's a complete catastrophe in the global market. Now, in terms of today's trade on the Nifty, the first support I'm watching out for is 19,480 to 19,512, which has been the recent low over the last 3 or 4 days, and then 19,253 to 19,333, which has been the low of the last two series, 19,255 September series and 19,333 October series. On the upside, resistance comes in at 19,600 to 680, that's the option zone, and then 19,840 to 850, which series high, which has been there many times. On the Bank Nifty, the levels I'm watching out for, first support is 43,550 to 43,600, last 2 days low, and the bigger support is 43,150 to 43,250, which is the 200-day moving average zone. And on the upside, the resistance is 43,850 to 44,000, the last 2 days high, and 44,400 to 44,600, where all the moving averages, 20, 50, all these averages are placed. That's the high resistance. But of course, today's key is to see how the market reacts to ICICI Bank and Kotak, and whether there's any upside and whether that's sustaining or not. That's going to be crucial.
Indeed, that's going to be the big focal point today. Thanks so much, Anuj, for joining in and giving us the entire trade setup. For the time being, we slip into a short break. On the other side, we'll be joined by the management of Keyfin Technologies.
right, welcome back to Bazaar Morning Call. Very interesting discussion lined up. KFin Technologies is on our radar now. It was a good quarter for the company. There was a healthy growth in revenues and profits, while the margins also expanded. We have Shrikant Nadella, who's the Managing Director and Chief Executive Officer at KFin Technologies, joins us now here in the studio. He's come all the way from Hyderabad. Shrikant, thanks a lot for joining us, and appreciate you being here in the studio. It was a good quarter for you, as we just mentioned, and on an average, you've seen an AUM growth in excess of 20%, slightly above that. How is the quarter looking, the quarters to come, and what is the kind of growth that you're penciling in for the full year?
So just want to demystify one thing about our organization. So mutual funds is a large business, but then there is about 30% plus of business which doesn't come from the mutual funds. So the AUM that we track to the mutual funds is very, very critical. As you rightly said, we kind of end up 20% higher than the market. We believe that we'll continue to see the trend through the year for the rest of the 2 quarters as well, especially given the Q3, Q4 of the preceding year, there was actually a dip in the AUM, the corresponding revenue for us too. So we expect to see a high-teen revenue growth. In our revenue profile for this quarter, if you see, the non-mutual fund business grew by about 45% year-on-year, whereas the mutual fund business grew about 16%. We continue to believe the younger and the faster-growing businesses will outpace the mutual fund business by a factor of 2, and over a period of time, basically occupying at about 40% of my total revenue pool.
And 40% is your market share as well, right, in this space?
In the case of mutual funds, no, the SIP is about 40%.
SIPs, yeah.
The equity AUM is about 36%.
Okay, and what would the growth there look like in terms of, I'm just trying to understand in terms of market share, where do you hope to be over the next 1 year?
Market share is a factor of, so we measure it in multiple different ways. The number of asset management companies in India, we manage about 60% of those by number. The AUM, which my clients manage today, we manage 35% of that, the total pool. It's important to again take a look at what is the revenue-bearing AUM versus the non-revenue-bearing AUM. The equity portion gives us the highest quantum of revenue, just the same way it does for the fund manager too. The passive and the money market money that comes into the overall AUM, though it shows in the mix of the total AUM, it's not a revenue-generating mix. So the revenue-bearing component, we have about 35% of the overall market. SIP, which is a leading indicator in terms of where the revenue-bearing AUM will grow over a period of time, today we track to about 41%. So we believe that in the medium term, we should get to about 41% on the overall AUM.
Shrikant, hi, good morning. Sorry, you're saying equity AUM is a share of, that's a market share, you're saying?
36% of the market share, yeah.
And SIP is about, you said 41%.
That's right.
And what we've been seeing is the SIP flows have been very steady, whereas the discretionary portion has been coming off. I mean, actually, it's in the negative. It depends on how you calculate it. But SIPs have been growing to new records every month. So that is the one which needs to be tracked out of the entire equity component. I mean, what is the...
That's a very, very important factor to track because that is the sticky retail investor money that flows into the market as against the discretionary one-time lumpy investments that come through the corporates. And that eventually over a period of time drags up the equity market share, equity AUM market share of an entity like us, right? So at 40-41% of market share on SIP book and a 35 to 36% of the equity AUM market share, the delta of 600 basis points is what we believe we will continue to expand over a period of time.
All right. Hi, Shrikant. Good to have you in the studio. A couple of questions then. You told us that the top line growth, revenue growth will be in high teens. What about margins? Now you're in the mid-40s.
Yeah.
What should that look like? Point number one. Point number two, you have cash in your books. And some part of the street or sell-side analysts, they are believing that there could be some M&A in the works as well. Are they bang on sometime this year, second half of the year?
Thanks, Rahil, for that question. So we have been constantly, growing inorganically too. Over the past 4 years, if you see, we've done 4 acquisitions, one every single year. We drive our acquisition strategy either way to get into, drive more depth into the business. Back in the day, we acquired Sundaram BNP Paribas mutual fund business, the R&T business, my apologies. We have grown our international business through an acquisition of the transfer agency arm of Deutsche Bank in Malaysia. So on and so forth. So basically, yes, the cash on the books is largely meant for acquisitions. We haven't paid out any dividends. You might have identified that too. It's largely because we believe there is a very significant growth opportunity out there in the world. Let me tell you, where we are anchoring ourselves is to be a global fund administrator. Now, global fund administration is a $12 billion business. You would be surprised to note that there isn't one single Indian company who occupies any, takes any slice in that particular pie. And we intend to be that. We've done that in the IT, we've done it in the ITES, we're now doing it in the manufacturing, but not in the capital market infrastructure space. So we want to be the first Indian company from that standpoint to be a global fund administrator.
So we watch out
revenue opportunity.
Revenue opportunity.
All right, so we watch out for some inorganic growth in the second half of the year. That's what we're trying to indicate. Just give us a few numbers. Cash in books, the updated number, and the margin band.
So we, as of 30th September, we're on about 375 crores of cash.
Okay.
Probably as of today, we should be up more north of 400 crores.
Right.
We believe the acquisition, the margin profile, we would be range bound into 40 to 45% is a number that we believe, though we may be in a position to do a little bit more, we would want to plow back into the growth of the business. If you saw our business expansion, this year we won a contract in Thailand with Bank of Ayodhya. And that comes with itself a certain amount of business development expenditure, so on and so forth, without which ideally my margin should have been higher. So basically, we do not want to drive more margins as much as drive more growth at this point in time.
There's also an IMS contract that you signed with LIC Pension Fund. What's the quantum of that, and what is the kind of revenue potential that you see from there?
The quantum of that is about 25 plus crores over a 5-year period, and we would be managing, we are given the opportunity to design the entire front, middle, and back office system from investment management for the LIC Pension Fund Manager, who, if you saw, is basically the best performing PFM in all of the national pension system category today. With that, we manage 70% of all pension fund managers in the country. We manage about 60% plus of insurance funds. And in the case of mutual funds, 6 out of the 40 mutual funds we manage from a platforming standpoint.
And the great thing is your relationships are sticky. I mean, these are entrenched and long-standing. So it's not as if somebody else is going to come in and suddenly start to take away clients, etc. Just one last question: what percentage of the business that you manage you would describe as cyclical? I mean, we're in a great phase for markets. I mean, on the issuer side, on the fund side, everything, right? It's booming. But what percentage of your, say, revenues are cyclical in nature as a percentage?
So mutual fund business, of course, has a component of net flows and the mark-to-market. To that extent, you can call it, a certain extent, cyclicality will hit it, if the markets were to have a downturn. But what we've seen of late, Prashant, is that every time there is, markets going up, for example, you would start seeing that there has been a sell in mutual funds. That actually the net outflows have been higher. And that, in some sense, marks the, the maturity of the Indian investor at this point in time. And when the markets are down, there is more inflows coming up. So they have been having a compensatory effect, if I may. So we believe to that extent, though it is cyclical in nature, it hasn't the impact we haven't seen much in terms of the continued expansion of the AUM. Our corporate registry business, where we manage 5,700 plus clients in this country, starting from the largest company from market cap to the smallest, that revenue model is more portfolio fixed fee. So to that extent, the cyclicality will happen only when there is a mass exodus of demat holders, from the market, which is something that we do not see either. So broadly, I would say
the issuer side may be a little cyclical. I mean
the IPO revenue, yes, could be cyclical. But again, the IPO revenue as a component of the overall revenue is less than 5%. So to that extent, we're reasonably.
All right. It was a pleasure having you here in the studio. Thank you for joining us. We'll take a short break on that note. On the other side of the break, we have the pre-opening rates kicking in. We will also have Mitesh Thakkar, Sudarshan Sukhani with us to help us with the technical trades and tell us how to kickstart trade today. Stay tuned. Welcome back. You're still watching Bazaar Morning Call. As promised, we have Mitesh Thakkar, Sudarshan Sukhani joining us now to tell us how to approach trade. Gentlemen, morning to both of you. Sudarshan, so far the market was a bit tepid, right? There was no real cue that this market could latch on to move up higher. But today there is. ICICI Bank, there's Kotak Mahindra Bank as well. Do you think it's enough for the market to, take it out of its range?
Yeah, good morning. I don't think it's enough for the markets to push it upward, because the markets are being influenced by mostly world events. So Indian earnings will have only a minor, change in the market. And more so the banks. The bank chart, the bank Nifty itself has been very disappointing. It's at new lows for the recent months. So I would not pay much attention to the bank results and feel that the markets are likely to do what they want based on cues from international markets. Now, 19,500 is a critical support level for the Nifty. We are likely to open there, plus or minus a few points. Now, if this support holds, then maybe later, which means later in the afternoon or tomorrow, we can start thinking, okay, support is holding. Let's hope that this market will start a bounce back. But in the morning, there is no trade. The banks are a complete avoid in spite of earnings, and the Nifty may or may not hold 19,500. So we should just wait and see whether it holds that level and not trade at all.
All right. Got that. Good advice, Sudarshan. Thanks for that. Coming back to you for trades, but Mitesh is with us as well. Mitesh, good morning. Your thoughts on the index to begin with?
Morning, Prashant. I've been maintaining that, the markets will be ranged, and I don't see a reason to change that opinion. My belief is that getting past 19,750 or in the best case scenario, 19,850 would be very difficult in the short term, given the fact that the indicators are poised mildly on the negative side. And therefore, I think, we will possibly be looking at employing some range-bound strategies. The idea is that you might see a mild expansion of this range. So we might look at a 19,400, 450 on the lower side as the possible support zone, and 19,750, 850 as the upward supply zone. Try to buy closer to 19,450, keep a 60, 70 point kind of a stop loss from there and see if there is a good bounce back to take some profits. But anything closer to 19,750, I would start getting into a short mode. We will advise buying into put options there. And if we get closer to 19,800, 850, even go aggressively short on the futures side. So that's the way we'll approach it. It's a market which will be choppy, but broadly ranged.
Okay, all right. 19,450 to 19,750. That's the broad range. Morning, Mitesh and Sudarshan. Mitesh, you go first. What about individual stocks? What are you looking at?
Nigel, again, in line with my opinion that the markets might be under pressure, I have more of sell calls to begin with. I have a sell on ACC, which had a negative Friday, a big breakdown and a red candle over there. So ACC, I would recommend selling with a stop at 1986 for targets of around 1890. BEL is a conditional sell. It's just trading around that 134 mark, and 133 is the pivot level. Once it breaks that, go short with a stop at 136 for a target of 127. And a sell on HAL, again, a conditional sell. After a long time, HAL has come on the selling side of the calls. The pattern is now suggesting tiredness and a pullback to the averages. So sell below 1900 if that breaks. Keep a stop at 1930. 1840, 1835 should be the target range. And one buy call, that's on City Union Bank, though I like Kotak Bank as well, but I think it might open with a big gap up. So choosing City Union Bank, buy here with a stop at 134 for targets of 142.
Got it. And Sudarshan, how about you? What would your stock ideas be?
Yeah, see, Sonia, there are stocks that go up even in choppy markets and downtrending markets. And sometimes they are rewarding. So I'll start with Berger Paints, which is not going up, which actually had fallen, but has now broken out of a small trading range. Maybe that was a low for the stock and it could be renewing its up move. That's a buy with the stop under 570. It's a high risk buy. IRCTC is an intraday short. It rallied, then went into a trading range, broke down from that trading range. Intraday short with a stop above 704. Now there are two stocks which are doing their own thing. They're having continuous rallies, trading ranges, and further rallies. One is Bsoft, Birlasoft. That is a buy with a stop under 525. A small trading range should break on the upside. And the second is TVS Motors. Look at the chart. There is no bear market there. So again, it's a buy with a stop under 1590.
All right. Thanks a lot, gentlemen, for that. So those are all the stock ideas. Chandan Taparia is also joining in to give us some F&O cues for the day. Chandan, hi, good morning. First, I wanted your thoughts on, ICICI Bank and Kotak Mahindra Bank. How would you approach it in the F&O market? And what are the other stocks that you're looking at today?
Yeah, good morning, Sonia. Thanks for having me. So first, talking about ICICI Bank and Kotak, the structure of Bank Nifty is slightly negative. If you look at the Nifty versus Bank Nifty is underperforming. And if I look at the ICICI Bank and Kotak, then ICICI Bank structure is weak. The stock is holding below its 50-day exponential moving average. We have seen some built-up of short position. Stock is making lower top, lower bottom. So there are chances to drip down towards 900 levels in ICICI Bank. But if I talk about Kotak Bank, then some sort of stability is clearly visible here. We have seen some support-based buying in the counter. And I believe that multiple put writing and multiple support near to 1700, 1720 will hold it to take a move towards 1800 to 1820 level. Now, looking at the routine trading ideas, for Nifty index, overall bias is range bound. VIX is below 11. So because of that, not expecting major panic. But market is making lower top, lower bottom. Selective heavyweight stocks are not performing. Bank Nifty is underperforming. So we are expecting broader range in between 19,333 to 19,750 in the Nifty index. Looking at the stock, first trading idea will be buy on persistent system. This IT stock is doing well comparatively. Technically, it formed a pole and flag pattern, which has bullish implication. Momentum is clearly visible after the consolidation of last 6 weeks. A small follow-up can take the stock to higher by 4 to 5%. We have seen surge in the delivery volume and open interest also added in the counter. So recommending to buy persistent system with a stop loss of 57.80, and it has potential to head towards 61.50 level. Second trading idea, that is buy on coal pal. I have selected this stock because of surge in the put call ratio of the individual counter. We have seen put writing, coal unwinding, which is giving the bullish bias, and technically it has given a consolidation breakout of last 57 trading sessions. Supports are shifting higher, so one can buy coal pal with support of 2070. It can head towards 2180 level. Last trading idea, if someone wants to do, then I'll positive on exchange related counter, buy on MCX. Major trend is positive, making higher tops, higher bottom. Supports are shifting up, so one can buy with stop loss of 2230, and stock can head towards 2350 levels.
Okay, all right. Thanks very much, Chandan, for that. And great speaking with you, as always. I think we're getting into the fag end of the pre-open session, and we'll have that up for you. Absolutely flat. 19,546 is where we are at this point. Now, which are the top brokerage calls this morning? Sudarshan is here to tell you all about it. Sudarshan, good morning.
From Brokerage Corner today, 3 stocks are in focus list, and the first one is Paytm. Amongst a few positive brokerage notes, I have picked CLSA. It has maintained buy call and increased target to rupees 1200 per share, and EBITDA estimates are increased by 12 to 13% on back of healthy gross merchandise value and stable take rate. Second one is Voltas. Nomura has upgraded the stock to buy, and target is increased to rupees 983 per share. It finds valuations attractive at current levels and believes healthy growth trend for UCP will sustain. Last one is UBL. It held its con call post-market hours on Friday and mentioned that growth and premiumization will be key focus areas for the new CEO. After that, Nirmal Bang wrote a note. It has upgraded the stock to buy, and target is increased to rupees 1930 per share. Nirmal Bang says Q2 results were well ahead of expectations on all fronts, and it expects EBITDA to grow by 57% CAGR in FY23-25 and 44% in FY23-26.
All right, Sudarshan, thanks a lot for that. Well, those are some brokerage views, but let's get back to the big story, the banking and financial space. A whole host of earnings came by during the weekend, led by Kotak Mahindra Bank, ICICI Bank. There was, of course, Paytm as well. Santanu Chakrabarti, who's the India analyst, BFSI at BNP Paribas, joins us now to discuss what he made of these earnings. Santanu, good morning and thanks for joining in. I want to start with ICICI Bank, right? It was clearly a purple patch. I mean, there was nothing that went wrong this time around in terms of earnings. But from a stock and valuation standpoint, what kind of an upside do you see? Have you scaled up your either your earnings estimate or your target price?
Right. So if I look at the numbers that ICICI Bank has turned in, I think the strongest part of the numbers is, of course, within the credit growth piece. Even with only 3.5% kind of sequential growth in wholesale, if I look at what business banking has done, what SME has done, what retail has done, and within that, even what specific subsegments of retail has done, it's a very, very impressive performance. Where margins marginally below where people expected it to be? Yes, I mean, we had been expecting a moderation in margins. And in our quarterly preview, we had also pointed out that this was probably the one stock where negative surprise on margins is possible. But because the growth was so healthy at an overall NII level, I mean, there's practically, no disappointment at all. And from there on out, since they posted the lowest credit costs in a long, long time, ROEs appear very healthy. Of course, one needs to normalize credit cost to think through sustainable ROE, but nothing major really to complain about in the numbers. If I were really, splitting hairs, I would say that, their current account, savings account money performance, I mean, while it's been weak for the sector as a whole, they have somewhat lagged their best-in-class peers, especially within the context of current accounts, and maybe that's a minor quibble. It's really, finding fault with what is essentially a very, very strong print.
Okay, hi Sandanu, good morning. Good to hear your thoughts on ICICI Bank. Let's focus on the other big name, Kotak Mahindra Bank. They've got a new appointment coming in there, Mr. Vaswani, and also the tenure has been given as 3 years. What do you make of this, as well as the 3-year term that's been already approved?
Well, I mean, Mr. Vaswani obviously comes in with a illustrious track record, but what is interesting for us to note is that that track record, for the best part, is actually outside India. So, every company, every bank, at any point in time when it makes a leadership-oriented decision, there are certain skills or abilities that they prioritize. What is very interesting for us is the message within this appointment. That Kotak Bank clearly is thinking a lot more seriously about digital and the emerging segments like unsecured lending, like personal loans, like payment products, and so on and so forth. And if you really go back and look at their historical approach to unsecured lending, you'll realize that a lot of water has actually flown under the bridge in the last, especially 12 to 16 months. And I think this particular appointment, which, with the limited amount of information that we have, seems to be one which preferences, knowledge about emerging technologies and the digital infrastructure more than, maybe India-specific domain experience, is a pointer towards what the bank's strategy is going to be down the line. It's probably an early signal on what the bank's future shape is going to include.
Okay, all right. So that's on Kotak Mahindra Bank. But in terms of, the stock price, what is your view now? What kind of an upside do you see, if at all? And compared to peers, right, now that there is a new management at the helm, of course, you will need to take some time to assess what the management does from here on and how things could change. But compared to peers, what does your pecking order now look like in the private sector space?
So our pecking order is actually HDFC, followed by ICICI, and then Axis, and then SBI Kotak. Okay. So Kotak is lower down the pecking order, and we'll explain why. The reasons are very simple, and they relate to valuations and growth. Now, the slightly higher than system growth that Kotak has been delivering, actually it's slightly higher than peer growth, meaningfully higher than system growth. In the last 4 quarters, a little more, is actually highly necessary given Kotak's valuations. And it relates to its capital structure. So this is still a bank which is about 60-70% below the leverage threshold of most other peers. And this has implications for its core ROE. So even if the ROA is very healthy, once you're gauging a bank in terms of what core price to book multiple it's trading at, and clearly there amongst the larger banks, Kotak appears to be the most expensive, then the question of ROE starts to come in. And the only organic solution to a high ROA but limited ROE problem seems to be high growth. And this has become very clear to us. And it was one of the reasons why earlier we had a hold on the bank until the stock corrected quite a bit. From that perspective, them giving 6% sequential growth is great news. The fact that they are not easing or taking their foot off the gas as far as their new focus businesses of personal loans, credit cards, or for that matter, even microfinance is concerned, is again good news. But this growth, significantly above system level growth, needs to sustain for at least 3 years before the ROEs reach a stage which can justify the current multiples. Sure. And that's how we'll have to think about that. Can Kotak deliver that? So far, so good, at least in the last 4-5 quarters. But the ask is there, and the ask will remain.
Got it. That was a really helpful conversation to understand how investors should react to the new management on board and the numbers as well. Santanu, thanks a lot for joining in. Let's take the pre-opening session rates now. Looks like it's going to be a flat opening with a bit of a negative bias, but a lot of stocks in focus. So there is ICICI Bank, which is up in the green. There's RBL Bank, which reported a decent set of numbers. There's JSW Energy, which could be one of the stocks of the day. Very good margin up move is what JSW Energy has seen. Let's get that stock up on board as well. JSW Energy is the one I'm talking about. And Ipca Laboratories, there's some positive news flow there. So that stock is up almost about 5%. But Abhishek is back with us to talk about Credit Access Grameen and why you should be watching out for that one. Abhishek, over to you.
Well, Sonia, they have revised their FY24 guidance, and it's a much better guidance now than the earlier one. So net interest margin is now seen between 12.7 to 12.8%. Earlier guidance was 12 to 12.2%. Cost to income ratio or operating efficiency, as we call it, is coming down to 31 to 33% from the earlier guidance of 35 to 36%. Hence, there is ROA improvement of almost 70 basis points, which is heartening to see. It's now to be ranged between 5.4% to 5.6% from the earlier guidance of 4.7 to 4.9%. Even the ROE guidance has been upscaled to about 24 to 25% for FY24 versus 20 to 21% earlier. In terms of the Q2 FY24 performance, AUM growth was 36% YOY and 3.1% quarter-on-quarter. Asset quality also improved. Net interest margin has also improved. So overall, good set of numbers and good guidance could see the stock well in green today. Back to you.
All right, thanks a lot for that. Just before the market opens, want you to look at one more stock, Balkrishna Industries. The numbers were very weak in the sense the top line was very weak and the commentary from the company is quite cautious. So if you look at it, the revenues in Q2 have fallen about 15.5%. The margins were decent, about 23% compared to 16% last year, but the profits are also down about 9%. Now, the sales volumes in Q2 were down 11% this time around, and the company says that the volumes in Q2 could not be shipped out because of the Biparjoy disruptions, and hence that impacted the revenues. But they also say that FY24 full year, the volumes will degrow marginally given the kind of challenges that they saw in the first half. And the capex spends for the full year would be about 900 odd crores. So that is one more stock. In pre-opening is down about 1.5%. But let's take it straight to the market opening now. Is very, very flat. Not a bad thing considering that, you know, we have a negative global Q. So the market is resilient at 19,500. The Nifty Bank is the one that is holding up this morning. The Bank Nifty is up about 50 points. The mid-cap index is flat as well. ICICI Bank is really batting for the bulls this morning, so 1% higher there, followed by Nestle, Adani Enterprises, Bajaj Finance, HDFC Bank. So you have ICICI Bank, HDFC Bank, SBI, and something like an Adani Ports that's just holding up in the green right now. On the downside, though, Kotak Mahindra Bank is your top loser, down about 1.5%. Balkrishna Industries in the broader markets is down almost 1.5%, so keep an eye out on that. And then you have the larger stocks like TCS, L&T, Apollo Hospitals, Cipla that are under a bit of pressure, HCL Tech, Titan, etc. are also in the red. Net, it is an absolutely flat start to the market. The advanced decline ratio is actually positive, has over 1,300 stocks on the advancing side, but a lot of earnings reactions like JSW Energy, Amber Enterprises, Balkrishna Industries. Nigel will talk more about that, but largely a quiet.
Well, that's right, Sonia. A few stocks though are moving around. JNFC, they're going to be considering a buyback on 8th of November, so that stock was up by close to 2%. Ipca Laboratories, the US FDA has classified their Ratlam facility as a VAI, this voluntary action indicated. Remember, this facility has been under import alert since January 2015, so that's one stock that's popped up a good 4%. You have Bansali Engineering, smallest stock out there. The numbers look pretty okay. The stock was up close to 2%. Rosari Biotech as well. That's another stock that was reacting positively in pre-open. So Bansali is as flat as can be. Now pull up Rosari. Volumes were not very high, but it had opened up well in the green. Stocks that are lower though post their numbers. You have Amber that's a little bit lower post its numbers. Let's pull that stock up. Suntech as well had opened up in the red in pre-open, so that stock is well under pressure. Amber now down close to around 7%. Laurus Laboratory, well, it saw a recovery in Friday's second half. The street liked the fact that there was a recovery on margins on sequential basis. So that one's pulled back a good 3.5%. Rajratan Bios as well was a little bit low, so that's another stock that should come up in the screen. PNB Gilts, pre-open the stock was down close to around 8 to 9%. Let's see what it settled at as we speak. So that's another stock that should come up in the screen. And Suzlon, last few days has been seeing a lot of fund action. So, that one comes up for you on the screen as well. The volumes are very, very high in pre-open. Prashant.
Nigel, the stock of the moment seems to be BSE. That is Bombay Stock Exchange. It'll come up on your screen. 5.5% higher. Stock's at about 1671. There is a IIFL note, and we'll actually try and have the BSE management join us, as well. BSE has increased its equity option tariff by between 3 and 6.5 times. This is a note from IIFL over the weekend. IIFL basically has increased their price target, earnings estimates by between 25 and 35% for FY25 and FY26. So this is, what's come through for BSE. Look at the volumes as well. It's the top traded gainer, volume-led gainer on the market right now. So that's quite something. What else? Suzlon, I think you mentioned 5%. Stocks at about 33. Again, huge volumes on Suzlon. I think result reactions mostly we took note of. Credit Access, I think, is up their guidance, and markets like it 5% higher. It's a top-tier microfinance company. There is Poonawalla FinCorp, which reported numbers 2% higher. IDBI Limited is up about 2%. Bombay Dyeing is up, but Bombay Burma was up sharply on Friday, and it's up another 3.5% this morning as well. So that's something which is coming through. Cochin Shipyard is up about 2.5-3% or so, and so on and so forth. On the downside, maybe just take a quick look. So 1,000 stocks are up. Actually 1,050 stocks are up and 850 stocks are lower right now. Kotak is the top loser, 2% lower, and volume-led loser, by the way, at this point. And Paytm is down about 1.25% flattish on Paytm. Loris, no respite really. Numbers have been poor once again. So 3% lower on Loris, 389, just under 390. MMTC is down. MMTC, of course, we've been mentioning the low float stock theme. Stocks come off quite a bit. It's another 4% lower. Amber, I think we mentioned Amber, 8% lower on Amber. Stocks at about 2,800. So that's a large cut coming through this morning in terms of overall trade. So, the market's up 6 points. So after everything said and done, at least at the index level, things balance out, and you don't have very much at all on the Nifty. So not even a dip, but absolutely a flat kind of start, and from that point the market's kind of moved on. So 19,500 still being held, and we're about 50 points on top of that. Our market master of the day is with us. Sunil Kaul is Asia Pacific equity strategist at Goldman Sachs. He's with us now. Sunil, good to have you with us here. Thank you very much for your time. We got some serious Teflon coating here, and not just us, but markets around the globe. Equity markets, as someone was pointing out, I think it was a Goldman Sachs analyst who said that the equity valuation seen relative to where bond yields are is the most expensive in the last 20 years or so. But we seem to be in a bit of a new normal. Your thoughts, Sunil?
Thanks, Prashant, for having me. Look, you're right. I think globally, if you just look at where the US 10-year is, or the bond yields in general are, equity valuations do look expensive. And obviously, I think for India's case, we do have support from the domestic flows. But in general, I think if you look at the FII flows over the past couple of months, we have actually been seeing sell-off across markets, right, in the last couple of months. And a lot of that, I think, is to do with the fact what's happening globally, right? If you, for example, looked at the macro headwinds of higher oil prices, strong dollar environment, US 10-year, as I mentioned, at 16-year highs, I think that has impact on foreign flows, and we're already kind of starting to see that in the last couple of months. And in fact, if you look at the emerging market funds, we are actually seeing outflows in emerging market funds for the last 12 weeks now. Across Asia, probably September and October, pretty much every single market has seen outflows. So I wouldn't say that the foreign flow environment has been pretty strong. In fact, on the contrary, things have been pretty soft overall because of the global sort of macro risks here. But I think what's holding up India also is the strong domestic flows, which is something which is a bit unique to India in that sense.
In fact, I was going through your note, and in that you do mention that there are outflows that we've seen from foreign investors, and not just that, even inflows have slowed down in the month of September. The redemption pressure, you say, worsened the most in small cap funds. Can you tell us a little bit about why that could be? as a trend from here on, for the rest of the, say, calendar year or even fiscal year, does it make sense to stick with the large caps compared to the mid and small caps purely because of what's happening with the macro environment?
Yeah, Sonia, I think, look, I mean, as we all know, I think the broader market is obviously up 15% from the lows, but the real action has been in the mid and small caps, right? I mean, they are up like anywhere between 35 to 45%, even at the index levels, and obviously very strong moves at the stock levels. And part of the reason is because of the domestic flows, because what we have been seeing in the flows over the last many months is that you're seeing very strong inflows in mid and small cap mandates. And actually the large cap mandates were the ones which were seeing outflows, right? I think the September data, I mean, as you mentioned, we saw some moderation in the overall flows. I think it's hard to call it a trend based on 1 month data because if you look at the last 12 to 18 months, we have seen slowdown in flows and then sort of flows have picked up again. But I think what was noteworthy, as you mentioned, Sonia, was that the redemption pressure, especially on the small cap mandates, started to pick up quite significantly first time in a while. I think the redemption numbers, if I recall correctly, was up like 70% month on month. And so I think we are seeing early signs that people are possibly kind of profit taking given how much things have run up there. Our own sense is that, I mean, looking forward, you might see flows kind of coming back into large cap mandates, given how much mid and small caps have rallied, given the fact that if you look at some of the relative valuations, relative prices, mid and small caps are at record levels compared to large caps. And so if people are kind of generally feeling a bit more sort of conservative, especially kind of heading into the election season, we think flows should rotate back into large cap mandates. I think so far we haven't seen evidence of that. I mean, the large cap mandate flows are starting to see less outflows. So at least the outflows have moderated, but we haven't seen major inflows in large cap mandates. But we think that's probably will happen over the next 3 to 6 months.
Hi, Sunil. So more amount of comfort in the larger cap names maybe from now on, given the kind of risk that we have on the table. You briefly mentioned about the state elections as well, and that's going to be, taking center stage, say, for the next 45 days or so. What's the view out there? The ruling government, that's the BJP, various policies are already in motion. Will the street ignore the state elections and focus directly on the center elections that are scheduled for early next year? Or do you think the state elections as well will be taken note of? Because there could be a couple of disappointments for the current ruling party.
Yeah, I think Nigel very well asked. Look, I was in Europe a week back, so running across sort of 4 different cities, seeing investors. And I would say, I think people are super focused on elections. It keeps on coming in every single client conversation we are having, not just in terms of whether the current administration comes back in the general elections, but also what is likely to happen in the state elections, as you mentioned, and how should we position, right? I would say I think that the investor expectation generally is that that the current administration, I mean, there will be kind of volatility picking up into the elections based on the opinion polls, based on what the clients are saying. But the narrative still remains that despite the results in the state elections, there is more likely to be policy continuity next year. And so that's why I think the market is kind of ignoring any risks around elections. We also kind of noted in our recent report that if you look at the vol levels, both implied vols as well as realized vols, that at decadal lows, and some of the protection pricing on the headline indices, they are at kind of multi-year lows. And in fact, Nifty put options are cheapest globally across major markets. So it seems like the markets are pretty complacent about elections. Our own sense is that you should at least start to see more noise around state elections, which means that volatility should pick up, which has been the pattern in past elections as well. And for people, that generally means that if you're long only, you want to be more rotating towards safer parts of the markets, but more into large cap quality names. And if you have the mandate to sort of hedge any of the volatility risk, you should be doing that via short-dated 3 to 6 month options out here.
There is a big earnings upcycle that's currently underway in the banking space, especially with private banks, right? Whether it's ICICI Bank or even something like a Kotak Mahindra Bank, HDFC Bank as well. How are you feeling about that? Do you think that there is more re-rating on the upside for these names, or do you think that it's become a bit of a crowded trade now?
Yeah, I'm glad you asked that, Sonia, because I think financials is one sector that has obviously underperformed in this sort of broader rally in the markets, right? And part of the reason, obviously, was because of some idiosyncratic factors with some of the banks, merger in one of those, leadership change in another one. Um, but broadly speaking, I think we are at a stage wherein we feel that the cycle is inflecting in the terms of margin should start to improve because deposit rates are peaking in here. And so our own sense is that you should start to see earnings upgrades in banks. And in fact, if you look at earnings revisions in the last sort of 3 months, you're seeing modest upgrades in banks already, right? It's also one of the sectors where valuations are pretty reasonable, sort of more mid-cycle in general. And so I think we are pretty optimistic on banks or not just next 3 to 6 months, but over the next sort of 18 to 24 months. We think that that's one sector where people have been positioned but haven't sort of made money this year because of the underperformance. But given many of these idiosyncratic issues are behind us, banks should start to perform much better, especially on the back of both earnings upgrades, but also potential for valuation re-rating, given things are kind of still mid-cycle there.
Okay, all right, Sunil, we'll leave it at that. Thanks a lot for joining in. Have a great festive season. Hoping we'll chat with you again very soon. But until then, thanks for being with us on CNBC TV18. Well, the market is very, very quiet. So the start to the week has been absolutely flat. A lot of stock reactions, of course, ICICI Bank. There is Kotak Mahindra Bank on the downside and a lot of other nifty gainers like M&M, Divi's Labs, etc. But it was a good set of earnings by JSW Steel. That's one of the big movers in trade. The numbers came in above street estimates, largely driven by a good performance in the India business. Nigel caught up with Jayant Acharya, the joint managing director and CEO of the company, to discuss their Q2 performance and began by asking about the pricing picture and coking coal costs guidance. Listen in.
So I think our results have been good, primarily driven by a very strong volume growth in the domestic market. Our change in sales mix and the product mix has also played a very important role. Our value-added sales have been about 62% of our overall mix and has gone up QOQ by 15%. We have also liquidated inventories, which we added in the last quarter. So 300,000 tons of inventories we liquidated in a traditionally weak quarter. On your query on the price, I think in the quarter one, we had indicated that prices did fall in the domestic international markets, and impact of that did flow into quarter two. However, it was offset by some improvement in prices in August and September in India, as well as a lower coking coal price, which we had in quarter two. We had a fall of about roughly $54 in the coking coal prices in quarter two.
Okay, all right. So coking coal cost then effectively for the past quarter was something in the vicinity of around $230?
Yes.
Okay. So the path ahead then, for quarter three, do you see a further drop in coking coal costs? Because you would have bought coking coal at a price that was low as well, so you could get some bit more for benefit. And from quarter four onwards, do you see that cost benefit catch up? That's on coking coal side. And price increases have come about, so how does it compare? Average realization today in comparison to average realization for second quarter, how much higher?
So let me put it this way. Prices which had gone up in the Indian domestic market between August and September will flow into the October-December quarter. Coking coal prices increased substantially during the last 2 months, and that would also flow into the October-December quarter. However, we expect that by and large, we should be able to offset the increase in coking coal prices with the price benefit which we had in the last 2 months and some increase in the month of October. Coking coal prices, I think on an absolute number, may go up by $25 to $30 per ton.
Okay, all right. That for the third quarter, that is?
For quarter three. Part of that will also flow into quarter four, but yeah, for quarter three, $25 to $30 more.
Okay, all right. But the price increases could offset some part of that. So, Mr. Acharya, give us a sense about the India EBITDA per ton, because that's looking rather good. We haven't seen this number of around 12,750 rupees per ton in the last few quarters. Will EBITDA be directionally better from here? for the third and the fourth quarter, given that volumes pick up, you're getting out of a seasonally weak quarter as well, and pricing as well is on your side?
Yeah, so I think over the last few years, we have put in some initiatives which are playing out now, whether it's cost savings, value addition, better efficiencies. Those have yielded results. So over the last 3 quarters, if you notice, our EBITDA per ton has been very consistent. We expect our numbers to be, I would say, directionally, I wouldn't say better, but it will be range bound. We have the headwinds of global, but however, India under this backdrop continues to do extremely well. Strong domestic momentum driven by a very good spend on infrastructure building by the government of India, manufacturing doing quite well, consumption doing particularly quite well. So I think we have the levers available for the H2 as a whole, and seasonally, this is a better period. So we should see a decent growth in terms of volume, which would play into EBITDA on an absolute number basis.
So EBITDA per ton for India business around current levels?
Difficult to put a number on EBITDA per ton, but because our capacities are going up in BPSL, we would add our phase 2 of expansion, which will come on stream. So aided by that, an improvement in some of our existing operations, because there were some shutdowns in the last quarter, I think we should do better in terms of absolute volume term, and that would give us some better EBITDA on an absolute number basis.
Okay, all right. Absolute number is what you're looking at. But the overseas business, that's been a little disappointing, Mr. Acharya. If I look at the US business, the Europe business as well, it had an off quarter, maybe something to do with regard to a seasonal aspect played out there. But we were getting used to that 500, 550 crores, 600 approximately in that vicinity, 5 to 600 crores of EBITDA, which hasn't happened this time. It's less than 100 crores. What's the quarterly run rate we should look at for overseas business EBITDA per quarter?
So in the US operations, Baytown did better. Baytown, which is the plate of the pipe mill, has done better. In Ohio, we had headwinds. The market were not supportive. The prices in the international market, as you're aware, had fallen. So that impacted both volume and the margins. So we had a difficult quarter in Ohio. Going forward into this quarter, I would say that Baytown will continue to be stable. However, Ohio will see some headwinds again. December is a shorter month. The market demand, while it has improved somewhat, the pricing has also improved somewhat, may still not be good enough. So it will be a little better than quarter 2, but I still expect some headwinds to continue in Ohio. Italy, I think we had the decent numbers in terms of volume. However, there were some price corrections as per formulas and as per some orders already pre-booked. Going into the H2 for quarter 3 and quarter 4, we expect the rail mills to do better. So I think directionally we are fine. We feel Italy will continue to be range bound and will deliver decent results.
So overseas EBITDA will improve from here on at least?
Better than Q2.
Okay, yeah, I mean, looks quite, tepid in the past quarter. So improvement will be good. Give us a few more details. Net debt number is approaching 70,000 crores odd. You have CapEx underway as well. We understand that. And you're sticking to your CapEx plan. What do we end this year with in terms of the net debt number, Mr. Acharya? From 70,000 crores, will it head south?
So our current debt, which we are closing the quarter with, is just above 69,000 crores. And primarily, this has gone up on account of our JISPL merger. Our CapEx is on track. We have spent close to 8,000 crores on CapEx, including our India and international CapEx. Our target has been in the vicinity of 20,000 crores. I think we will continue to monitor CapEx for key projects going forward. And will deliver, to see that those projects are not impacted. We are keeping a very close watch on debt. You would have seen our ratios. Net debt to EBITDA at 2.52 for the quarter has improved well from the 3.14 in the last quarter.
Yes.
Going forward, let me put it this way, that we expect our ratios to be similar to where we are in quarter 2.
Okay, all right. Final question, Mr. Acharya, then. NMDC Steel, that seems to be the prized asset, and a lot of big ferrous players were looking at it. Is it still on the block according to you or not? Because, there was, I think, a letter of interest that was sent out. A lot of people were interested in that asset, maybe at a particular price. But what's the latest from your end?
So we have given our expression of interest for NMDC as well. We are evaluating the numbers. I think the plant visits and related kind of diligence is going on. It will go on. We don't have any official notification of any change in thought. So I think directionally, we will do our diligence and see whether it makes strategic or economic fitment to look at it.
Okay, that's the word coming in from JSW Steel. Let's slip into a quick break. On that note, on the other side, Natarajan Srinivasan of CG Power and Industrial Solutions will join in to talk about their Q2 performance. Later, Arun Mishra of Hindustan Zinc will be with us to talk about their Q2 numbers. Stay tuned. Welcome back. This is Corporate Radar. But before that, just one quick look at the market. The mid-cap index, by the way, is taking a turn for the worse now. It's down about 0.5%. There's definitely a lot of pressure. So something like a PNB Gilts, we spoke about that earlier, 12% lower now on that. All the, the PSU stocks, whether something like an MMTC, some of the sugar stocks, so the more vulnerable names are coming in for profit taking. You'd want to just be a bit cautious now in the broader markets. NBCC, Sri Renuka, Laurus Labs, all down about 3.5%. But CG Power and Industrial Solutions is the next corporate on our radar. It was a good performance from the company in Q2. Their revenue saw a very healthy jump, while the margins also surged on account of execution of export orders. Natarajan Srinivasan, who's the MD and CEO at CG Power, joins us now to talk more about that. Mr. Srinivasan, good morning and thanks for being with us on the channel. I want to start by asking you about your power segment, which has seen a significant uptick in order intake year on year. Can you tell us, in Q2, I think your order book was a little over 1,100 crores. What is the quarterly order book run rate that you hope to maintain in this segment? And by the end of the fiscal, what are you targeting?
In the power segment, there is both switchgear and transformer. The transformer order, unexecuted order book as at the end of the quarter is about close to 1,958 crores, a jump of around 74% compared to year on year. Similarly, on switchgear, the unexecuted order book is about 1,278 crores, an increase of about 64% compared year on year. As I said, inquiries are strong. I think this is likely to go up still further as we proceed. It is based on this that we have also announced expansion of capacity in switchgear during this quarter.
Okay, so you said that the transformer order book is a little over 1,000 crores and the switchgear order book a little over 1,278 crores, correct? So on a...
transformer is 1,958 crores.
Yes.
1,958 crores. Okay, got that. So on a consolidated basis, what does the order book stand at now? A little over 5,000 crores. And what kind of an upside are you looking at over FY24 and 25 on this 5,000 crore order book base?
Yeah, consolidated order book is 5,229 crores. So I think the further uptake is likely in power sector, definitely. And in railways and motor, as I have maintained, it will be just as usual only on quarter, because motor actually people buy on quarter. Railways actually they announce by tender by year on year. So much of it will probably be the same as what we have right now, unless in railways we are going to get some project orders.
All right. Hi, good morning, Mr. Srinivasan. Nigel on this side. For the first half of the year, you have done very, very well. Close to around 3,900 crores is what you've delivered in terms of revenues, and margins around 15%. Now you have a solid order book. The second half of the year is shaping up well, and traditionally, second half of the fiscal has been better than the first half. So you end the year up with what? Around 8,000 crores of revenues? I mean, if you just double it, it should be around that mark. And is there a margin upside potential from around this 14.8 to around 15%?
So we hope to maintain the margin in the second half. But, second half right now you are seeing the geopolitical tensions going up, and I don't know what will impact it will have on material prices, whether it can escalate to India. Second is aspect, we have the elections coming, whether this will have some kind of a slowdown. This is what just everybody is talking about. Subject to this, I think, our execution will continue to be strong, and we hope to maintain the top line as well as the bottom line.
So then doubling it, 8,000 crores is a given.
No, 8,000 is little on the higher side, maybe anything between 7,000 to 7,500.
Oh, that'll be too conservative, sir. Even the last time around, you were talking about the 7,000 crores odd. At the half-year mark, you're doing 3,900 crores. So, doubling it itself will take you to 7,800. So, should we realistically work with 7,500 to 8,000 crores? Should that be a broad range?
We will work on that. We will work to your target.
Okay. Tell us the utilization levels. You've done 2,000 crores in a single quarter. With your current capacity, what kind of utilization levels are you at? And also, you've got 550 crores of capex, as you mentioned, that you will be looking to spend. What could the asset turn on that be?
See, aggregate actually, we have total capex. Earlier, in this board meeting that the board has cleared about a capex of about 225 crores.
Yes.
Earlier, we have already cleared a capex of about 325 plus 25, about 450 crores. Aggregate about 675 crores is the capex that the board has cleared, of which 360 crores is in the motor side, and about balance will be in the power sector. In the power segment, both in transformer and switchgear. We hope to complete all these projects in next financial year before 31/3/2025. Assuming all the projects are completed and the expanded capacities are operating at, say, about 85% capacity utilization. At constant prices, that should give me an incremental turnover of about 5,700 crores.
Wow.
Okay. All right, Mr. Natarajan, hi, good morning. Sir, order intake on the industrial side is only about 4%, 4% higher. So there's a bit of a, what is that on account of? I mean, there's a bit of a slowdown?
No, I'll explain this. See, this industrial is consisting mainly of motors, and motors actually sold through channel partners. A large part of the sales takes place channel partner. Whenever the external markets or the environment becomes a little turbulent, the trade will become very, very careful. Supposing they were used to buy for 3 months, now they will probably, when the environment is turbulent, they will buy only for 1 month or so. Even though the underlying demand seems to be okay, because if they stock up and then if some reason or other, because of volatility, price goes up and down, etc., they will incur a loss. This is what is happening in trade right now. So we expect this to continue at least for the next 1 or 2 quarters. And I think the war, etc., has to subside, and then, some kind of stability has to come in. Otherwise, we don't see a problem.
How many motors are you making, sir, right now? Every quarter, and yeah.
So monthly, I think we are producing close to about 1 lakh motors.
Okay. And this is because the channel is not taking in because of the cautious nature. You would continue at this rate, or you will slow down your production as well?
No, we will continue. Be the inventory we have to carefully manage.
Okay. Just one final question. So this 7,500 crore guidance, 7,000 to 7,500 crore order, top line guidance that you have for FY24, does any of this include the Vande Bharat order? I mean, the potential that you receive from there? And if it doesn't, then can you tell us what is the update on that order and what is the kind of revenue potential you see?
So it doesn't include. Anyway, it is Nigel's guidance. It's not my guidance.
Nigel tries to get the numbers out of you, but you're not giving it to me. I'm just going by mathematics. 3,900 crores, second half will be as good. So that's how I'm getting to 7,500 to 8,000. But you're the boss who's running the business, so you tell me.
I think we'll be there. So, this does not include any order from Vande Bharat.
Vande Bharat.
Vande Bharat, as of now, we are looking at only some subcontracting, possibility of getting some subcontracting orders. As and when we get it, probably that will be an addition.
Okay, all right. Thanks a lot for joining in. Appreciate your thoughts. That's CG Power talking about the order book and the growth that they're expecting to see in the business. But definitely the stock that you should be on your radar is BSE. They have increased their transaction charges from November 1st. They've introduced a slab-based tariff. The stock is up 12% right now. Surbhi is here to give us more details on all of that. Surbhi, what does this mean for the company?
So this means increased tariff revenues essentially. So what they've done is they've introduced slab-based tariff rates for equity options, and this is only for the Sensex 30 running weekly contracts. Now the old rates were a flat 500 rupees depending across turnover. Now what it has happened, it has done it on a slab-based transaction tariff, which is up to 3 crores they will have 500 rupees tariff, 3 crores to 100 crores they will have 3750 of tariff, and as the transaction value goes higher, the tariff decreases. And this is still 25 to 40% lower than the NSE rates. So that means there is further, scope to increase the tariff rates from here on. And based on this alone, the analysts estimate that there will be a 4 to 5 times jump in their tariff revenues, which will further aid their profitability and the future growth potential. And that is why you can see that the stock is surging in trade today.
Okay, all right, Surbhi, thanks a lot for that. Well, let's move on to our next corporate then. Hindustan Zinc, that's the company on our radar. The company's numbers for the second quarter came in line with estimates. Now, LME prices were weak, but the cost of production has seen a sharper fall. Mr. Arun Mishra, the Chief Executive Officer at Hindustan Zinc, joins us to discuss the past quarter's performance and the way ahead as well. Hi, Mr. Mishra. Good morning, and thanks so much for joining in. Well, given the global demand and supply dynamics, what's the outlook on zinc prices? Because they have been rather weak in the past quarter or so.
So currently it's about 2400, and as I look at the future for next maybe another 5 to 6 months, it will be range bound between 2400 to 2600. Although personally I would like to see a number of 2800 on the board, but looks like in all probability and the slowness of European and American economy, lack of recovery in China, all that will have its effect, and it will still be remaining within around 24 to 26 should be the range it will play in.
So when do you get to the annual run rate of 1.2 million tons?
So, although we would like to hit that 1.2 million ton run rate as fast as possible, however, we invested mostly in the mines to ensure that mines are able to produce more than 1 million ton metal in concentrate consecutively. We have proven that for last 2 years. Now the smelters are turning out to be bottleneck. All said and done, we are not able to cross 1.04 or 1.05 million ton kind of a number. So we are investing in a roaster. Next year, the roaster will come in line. Then the smelters would cross 1.12 or 1.13 million tons. We are launching few debottlenecking projects this year, and very soon, maybe by next board meeting, we'll announce them. Those debottlenecking projects, when come into place by next year end, which is 2024 December, then 2025 will be the year when we will try 1.2 million ton metal will be feasible.
Well, Mr. Mishra, talking about silver, since that Fumer plant has finally got commissioned, what are the odds that you hit the upper end of the silver guidance? Could you get closer to around 750 million tons? Or, also the Fumer plant has now got commissioned, so that's the reason I'm asking you.
No, so we are already at 360 tons in H1, and so H2s are normally always better. So surely we will be crossing 725 or 730 tons with the Fumer commission. Not exactly at the upper end, because Fumer has just been commissioned. It will be operating only for 6 months, and it is likely to give 3 tons of silver every month. So that comes to about 18 tons additional over and above. Part of it was already taken in the business plan, but in my calculation, we should be crossing anywhere between 725 to 735 tons of silver this year.
Okay, all right. The coal sourcing has improved for you. So what's the current sourcing mix like? What is the desired mix, and how much are you getting at the moment?
No, so we had the difficulty of coal sourcing last year. But however, this year we are about 45% domestic coal we have got. Remember, last year I was saying that we need 30%, but we are getting 6 to 7% domestic coal only. And we were having huge amount of imported coal. But this year we are fortunate in Q2, we got about 45% of the domestic coal. And this domestic coal comes at a lower cost, and that has helped us a lot. We have got the overall coal cost down, and our power cost was down, which was about 11 rupees or so last year, has come down drastically. that has helped us to reduce our cost of production in a big way. And I'm sure with the way Coal India is performing, this will continue. And our FSAs are already in place. We have got huge amount of backlog, so there is no dearth of, as far as order on Coal India is concerned, there is no lack of order. It's only the supply. But it's not only the story of domestic coal being available. We used last year H2 and this year's H1 of modifying our power plants in Chanderiya so that they are capable of digesting more and more domestic coal of high ash. We did modifications in their ESPs, and so they are, well, earlier they were operating at about 70% imported coal, so they are now able to operate at 100% domestic coal of a very high ash of 40 to 45% ash. So those modifications have helped us to digest more and more poor quality domestic coal and produce the same power.
Okay, so will the cost of production fall further from here on, you think?
Yes. Oh yes. Our cost of production in the second half will be even lower than H2. Cost will be lower than H1. So we will be in the cost guidance as well. If nothing undue, suddenly no disruption should happen. Otherwise, the way we are going in the cost reduction efforts, we will be achieving even lower cost in H2.
All right, Mr. Mishra, you've given us a fair analysis about how the operation of the company is shaping up. But let's talk about other aspects then. Any fresh proposal to buy international zinc? That's Hindustan Zinc buying international zinc. Also, what's the possibility of trying to redo this deal at a lower price? Is that an option?
No, right now there is no fresh proposal that we have taken to board. Right now we are talking about increasing the market cap of Hindustan Zinc first. Of course, with the LME being low, the first priority is for Hindustan Zinc to produce as much of cash as possible by reducing cost and ensuring that the volumes we are able to sell in the market with reasonable premium. Otherwise, yes, currently we are looking at, as we have made the announcement of that, we will commission a study to look at how to increase market cap. Perhaps one of the ideas is create 3 companies out of Hindustan Zinc, 1 company. So those are the kind of discussions we are in now.
Okay, by when can we see action on this segregation of entities?
No, so we have just commissioned the study by a reputed advisory firm, and the time limit given is 4 to 6 weeks. So we expect that by 2nd week of November, we should have the report in hand, and then we'll take it to board. And then based on the discussions and decisions taken in the board, we will take necessary steps if it is decided in the direction of forming 3 companies.
Okay, we'll have to wait by then for the 2nd week of November to hear about that. But what about dividends? Now there's no big cash balance in Hindustan Zinc. What's the outlook for the remainder of this year?
No, for ability for Hindustan Zinc to generate cash remains strong. Even at $2,400 of LME, we still have the ability to give a profitability of 46%. So that is not going anywhere. Now the question is how to use the cash between the growth and commissioning new projects or distributing as a dividend. It's for the shareholders to decide. I leave it to them between Government of India and the Vedanta, who are the primary shareholders of the company.
Well, talking about the Government of India, what's the update on the OFS? The last many quarters, you have been expecting it, we have been expecting it, but no update. What's your take? Does it happen in this fiscal?
The last news report I read was clearly stating that government is very keen on getting this disinvestment done, and looks like, as if I remember correctly in the news report, the timeline was mentioned that this current fiscal year only it will be done. So I hope so it happens.
Okay, thank you very much for joining us. It's a pleasure having you with us here, and thank you for running us through all of those details. Well, I think, time to take a quick look at the market as well, which is absolutely flat. 6 or 7 point change, nothing at all as far as the index goes. I think Midesh is with us for a quick check on whether he wants you to do anything on the index or any fresh trades he's seeing. Midesh, hi, morning again. Your thoughts? I mean, the standout stock mover is, of course, the Bombay Stock Exchange, but go on.
Morning, Prashant. I think positive news for increasing their revenues. BSE is doing well. But that apart, I think what is standing out for me is the Bank Nifty's resilience. I think let's see if the Bank Nifty can get past 44,000. I think that could signal a short-term reversal. But till that happens, I think you will see volatility with downward bias. So Nifty, I think, will maintain targets of around 19,450, which is about 85, 90 points lower from here. And the stock calls that I have, a buy on HDFC Life, which I would recommend buying with a stop below 630 for a target of 655. And a sell on Sun TV, which after a long time is now showing first signs of a correction. So Sun TV is a sell. I would recommend selling this one with a stop placed at about levels of 648 and a target of 620 on the downside.
Okay, I wanted your thoughts on the exchanges, right? BSE and MCX, both are sitting at fresh 52-week highs. BSE, of course, is in the news, up 11%. MCX is also up about 4-odd%. Is there further upside on the charts for these two names?
Sonia, yes, I think, I believe that BSE one, it's opened with a gap up and shown a good candle pattern today. I think they should definitely head towards levels closer to about 1940, 1950 on the upside, giving you about 10-11% trading upside, which is a good possibility in the near future. And I would still be a buyer on any mild decline, let's say closer to about 1700 with a stop below today's low of 1630. And MCX, I think, again, remains in a very, very good medium-term uptrend here. I penciled in targets of around 2650, but I would not suggest entering here purely because of the fact that the run-up which the stock has seen in the last few weeks.
All right. Thanks very much, Mitesh, for that. We'll come back to you for more a little later. We'll take a quick commercial break here. We are back, and Manisha will be joining in with what's happening, the latest on the commodity side of things. And we'll also have the management of CSB Bank joining us a little after that. Stay with us.
Welcome back to Bazaar Corporate Radar. Well, thanks for staying by with us. For now, the markets are very, very quiet, but let's put focus on what's happening in the world of commodities because of all the geopolitical tensions. Manisha Gupta is here with us. Manisha, over to you.
Well, thank you so much for that. We have seen the US dollar strengthen a bit, and that has led to some profit taking come in for the gold prices in dollar terms. And that's exactly the reason that you have the gold prices trading at an all-time highs in various other currencies. Well, in the Australian dollar terms, it's trading at a 3,159, which is an all-time high for Australia. Australia, remember, is the world's third top producer when it comes to gold as well. And that's not the only country or a currency. You have gold prices trading at an all-time highs in Japan as well, at around Japanese yen of 2,96,000 per ounce. This is an all-time high that you've seen ever in case of gold prices in Japan. And then you have it in China as well, where gold is trading at an all-time highs of 14,488 of yuan. We also have seen gold prices hit all-time highs in case of Taiwan, and it's trading at a 5-month highs in the US dollar terms as well. For the international markets, we have seen an all-time high of around $2,072 an ounce. We have seen gold prices gain up nearly 2.7% in the previous week and nearly 5.5% a week prior to that. The strength continues into the international markets even now. As I said, 2072 has been an all-time high for the US dollar in 2020 August. And for the Indian markets, we saw an all-time high in this year itself in the month of May at around 61,490. And the other currencies are the UK. We have seen it hit an all-time high in various other Asian and the European currencies as well. Well, the slowing economy, weak economic data, geopolitical risk premium, all of that has been really supportive for the gold prices. And with the expectation that the markets believe that the interest rates would continue to decline in the next year also has been supportive in sense of sentiment. The weakness in other currencies versus the US dollar also has led to buying in other currencies there. Markets also are looking at the geopolitical risk premium, and that is expected to continue to support. Talk about the projections now when it comes to the gold prices, and most analysts and banks believe that you are going to witness all-time highs in case of gold prices in next year as well. Well, that's DBS come out with 2,050 as an average price for next year. Goldman Sachs is binging on 2,100, ABN AMRO 2,000. So almost everybody talking about $2,000 to $2,200 an ounce in 2024. There are some banks which are looking at much higher prices than that as well. So we have 2,500 coming in from Livermore and Wheaton Precious Metal Limited. They're expecting 2,500 of an upside as well. Exim Australia last week on channel told us at 2,200. We spoke to TD on CNBC-TV18 as well, and 2,100 is what they said. So almost everybody talking about 2,000 plus kind of levels, mostly by the second or the third quarter of 2024. So good amount of buying is what we've seen here.
All right. Manisha, thank you very much for that. So that's commodities in focus, and we'll continue to come back and track that. Well, let's move on. CSB Bank is on our radar now. Second quarter earnings have been arguably weak. Operating profit has been lower. Margins have seen perhaps a slightly bigger contraction than what was expected. Pralay Mondal is Managing Director and Chief Executive Officer at the bank. He's joining us now to take some questions. Pralay, good morning. Good to have you with us here. Prashant this side. You know, we spoke to you at the beginning of the month when the business update came through. Has the NIM contraction been a little more than what you expected? And I mean, if you could explain what happened. Second, is this quarter what we've seen the bottom? And do you still maintain your guidance that NIM will be above 5% for the full year? Go on.
Good morning, Prashant, and happy Navaratri to you and your viewers. Yes, the NIM has been slightly muted, and obviously the cost of funds has slightly gone up for the entire banking system. So has been with us. Also, what happened last quarter was, I was just sharing about the gold prices, but in the end of last quarter, the gold prices are actually going down significantly. And right now, while the bond yields are going up, gold prices are also going up. But our prediction was we didn't know about this war that is going to take place. So given that, we had predicted that the gold prices will remain weak. That's why what we did is the higher LTV portfolio, we took it off our books, which are also higher yielding. And also when you take it off your books, there are certain outcome on the NIM. So that's why the NIM had gone down a little bit. Added to that, of course, the cost of fund increase which happened. But we are pretty confident that 4.84, which we have achieved this quarter, last quarter, this will be the bottom of the NIM cycle for us. And from here onwards, we'll pick it up. On the, sorry, yeah.
Yeah, so you said that you're going to pick up the NIMs from here, and the 4.84 perhaps is the bottom. Got that. Mr. Mondal, good morning and thanks for being with us. Just wanted to understand, is there still some stress in the retail and the MSME or the SME segment? And if yes, because there was some decline that we saw quarter on quarter. If yes, where do we stand at as of now? And what is, the outlook that you have on credit costs?
See, our retail book has just started. We have grown by around 38% year on year, and SME also have grown by 22% year on year. And typically, these businesses are seen year on year, not necessarily always quarter on quarter, especially for a bank like us. Given that perspective, obviously, there is no stress possible because the portfolio is just building up, some of this portfolio. But we are taking a prudent call on the retail business because we are trying to ensure that most of the other challenges which could play out in the short term gives way, and then we pick up the business. That's what I told last time as well. On the NIM specifically, on the question of Prashant, Sonia, what I want to tell is we are already half-yearly basis around 5.12, and we will maintain our guidance of 5+ NIM for the whole of the quarter.
All right. Hi, Mr. Mondal. Good morning. So NIMs have bottomed out. That's good news. Give us a sense on asset quality. What could the credit cost be for the year? And what about slippages? I think they've gone up on a sequential basis. So what's the outlook out there?
See, credit cost actually has not gone up. If you look at it, our credit cost is 15 basis points negative. It's a negative credit cost. Now, it's too good to be true for every quarter and every year. So our broader guidance is GNPA less than 2% and NPA less than 1%, and credit cost around 40 basis points till FY 2030. And as we are talking today, we are around 1.27 on GNPA, which is in line with what last quarter was. NNPA is around 34 basis points, which is in line with what last quarter was. And overall credit cost has actually gone down further to 15 basis points. But I'm not saying that's going to sustain. Credit cost will obviously become neutral to some positive, but not really eventful for us this year.
Okay. So can you tell us, the capital consumption in Q2 was on the higher side. What happened this time around, and will this run rate of capital consumption continue?
See, the capital for us, what happens is, in a way, it is good news because most of the businesses have started picking up. If you look at for the first time in the history of the bank, that all businesses, gold, SME, wholesale, and retail, all has shown a fairly good positive growth. Retail has grown by 38%, SME has grown by 22%. I'm talking about year on year. Gold has grown by 32%, and wholesale has grown by 17%. So from that perspective, I think some of these other businesses do consume little more capital. And as and when they grow, obviously some amount of capital cost will go up. Also, as we see that, in the end of the year, what happens is the inter profit comes into the capital accumulation, which doesn't happen quarter on quarter. Given that perspective, I think that's the impact we are seeing. But still, we are probably one of the highest CRAR ratio in the industry. So to that extent, we are quite comfortable.
Pralay, thank you very much for joining us, and good to hear that you're kind of sticking on to your guidance on NIM, etc., over 5% for the full year, and margins. More importantly, you think the worst is behind and things are bottoming out. Appreciate you joining in here on the program.
Thank you.
Sonia, we were talking about KFIN. We had the management in the studios with us,
yes.
Provider to mutual fund services, etc. Well, we've got a new mutual fund in the industry now. So, Samir Arora-backed Helios Capital has launched its fund today, and just wanted to put it out as an alert for our viewers. So it's a flexi fund which will invest across market capitalizations, and I think the NFO is open today. So, I think 45 asset management companies now, and this is the latest entrant. Of course, Samir is no newbie. He's been managing public money, 20 years ago. And of course, he's now coming back. It's like a re-entry in the fund management business, mutual fund business once again, under the Helios brand name. So just a alert for viewers who perhaps may want to look at this one as well. We'll take a very quick commercial break here. We'll come back and we'll hop across to Lata. It's our special segment. It's the economy. And Lata will get chatting with Deepak Shenoy of Capital Mind. They'll talk about the second quarter earnings performance for banking and financial services. Stay tuned. That's coming up.